Hey guys, Paul again from REO Auction Academy, and today I want to go over what is a good rental. And for me, what a good rental is a property that I can get into. Let's say I pick the property up for $50,000 and I know the ARV is say 150 or greater. So I get in for 50, I put 25 into the rehab, and if I can pull, here's my objective. If I can pull all my cash out, it's a keeper because now I'm into the property for nothing. It's very important though, it must generate cash flow. If it doesn't bring a positive cash flow in, it's kind of worthless. It's not worthless, but it does not help you as much. And what am I looking for is for me personally, on a single family, at least $200 bottom line net positive cash flow. In other words, if my mortgage, taxes, insurance, utilities, and maintenance is $1,100 a month, I need it to bring me in at least $1,300 per month. Okay, now there are exceptions, and I'll give you an example. I have a few properties, and the only rentals I really want now are ones I can get into, pull cash out, or be net cash neutral. In other words, I don't have anything into it. If I've got nothing into it, or if I've pulled cash out, I don't mind if it brings me in only $100 per month because I've already taken my profits out. Example, I did a property in Souderton, Pennsylvania this past year, about a year and a half ago, and I was able to pull out about 25,000 cash out of it, non-taxable too. One of the great benefits of real estate, guys, non-taxable income. Take that 25, put maybe 10,000 or 15,000 into another rental property, and now you've got your down money again for the next one, right? So what it does is allows you to find another deal, and maybe that deal generates another 100 or $200 or $300 per month cash flow. So you're just kind of increasing your wealth. You're taking your profits, rolling them, and putting it into another one. So that's what I personally look for in a rental. If I have cash sunk into it, now there's times when you have the accidental rental, right? You sunk. I have a couple of those which I'm selling in this market now, because I want to take the cash out. I got 20 into one, I got 25 cash in another. And I just don't, even though they generate cash flow, I want that money out of there so I could put it into something that's even more profitable for me, or at least net neutral for me. So that's one of the objectives I have personally. And when you have a great market like this, it's a great time to sell it and get your cash out of it and move on to the next one. If you're new to investing, try to do that as often as possible. Try to get in there where you're into it for next to nothing. Then you're just building cash flow. Have a separate account. Your extra cash flow goes into a separate account. Try not to use that for income unless you have to, right? Otherwise, put in there, save it for renovations, for repairs, or your next investment. So that's my advice on how to pick up a rental property and what is a good rental property. Hope you guys enjoyed it. If so, make sure you click the like button and make sure to subscribe to our channel, and we'll catch you on the next video.